So I think we're going to go down from here. And I suppose that the most popular stocks like Nvidia and Tesla and so forth, which are widely held by the public, that these stocks will go down substantially and in the order of 70%. Well, there are similarities and differences. Uh, the similarity is that the market is euphoric. People are very optimistic, and that's usually not the best time to buy when everybody is optimistic. I would argue that the best buying opportunities occur when participants are very negative. Say, you look at Hong Kong until, say, 3, 4 years ago, people were always very optimistic about China and Hong Kong. And now you can't read anything positive about Hong Kong and China. And these markets have come down a lot and are now reasonably valued. I mean, in Hong Kong, you can buy property stocks at a huge discount to their asset value. Now, I'm not disputing that the asset value can't go down. It will go down, but not that much, because the discounts on the net asset value are frequently 70, 80%. So I
Yeah, so
think if you want to find good value, you have to buy assets that are neglected and overlooked. And if you want to buy expensive assets, you buy assets that are in the limelight, say the Magnificent Seven at the present time, or the FANG and FANG-related stocks in America. Well, I think that the markets are forming a long-term top. The first top area was in 2021. I mean, officially, the market peaked out in January 2022 and then proceeded to go down about 20%. But a lot of stocks had peaked out in early 2021, like the SPACs and the meme stocks, the Capricorns and so forth. So I think we're going to go down from here. And I suppose that the most popular stocks like Nvidia and Tesla and so forth, which are widely held by the public, that these stocks will go down substantially and in the order of 70%. Well, this is a very good question. What is safe in an inflated asset bubble? In other words, we are today in an inflation that wasn't very pronounced in consumer prices over the last 40 years, say 1980 to today. But we had very powerful asset inflation. So assets are very expensive, whether that is residential real estate or paintings or collectibles like Ferrari cars and so forth, and fine wines and whiskeys and so forth. And stocks in general are high. And I think all that will be deflated massively in a asset deflationary period. Now, exactly when that will occur, I'm not sure. But I think that monetary policies are now relatively in a difficult position, because if they print money, then consumer price inflation will accelerate. And if consumer price inflation accelerates, then interest rates will go up. And a lot of assets are priced or have been priced for interest rates to go down or be at a very low level. They haven't been priced for continuous, relatively high interest rates. I mean, for me, interest rates today are not high, because in the 70s, They were always above 6% and went to over 20% in 81. But relative to the last 15 years, interest rates at the present time are relatively high. They're low, but they're relatively high. So I think the system is going to be very vulnerable. And I'm questioning what is safe, because in an asset deflationary period, everything comes down. But obviously, some things come down less than others. I'm not an expert about private equity because I invest nowadays mostly in liquid securities. In other words, in the stock markets, in the bond market, in commodity markets, where I can buy and sell. I don't want to be in illiquid assets. But it is clear to me that private equity will have some problems. I think this is a very difficult question to respond to because interest rates on bonds could be 10%, and if inflation is 14% or 15%, then interest rates are still negative in real terms. In other words, interest rates would be at 10%, inflation at 15%. So it would still pay for you to essentially borrow money because interest rates would be negative, inflation adjusted. So to answer your question, the breaking point will be when money becomes tight. And it hasn't become tight yet. There's plenty of liquidity in the world. And that's why you see these speculative excesses, like massive moves in cryptocurrencies or massive moves in one day in some speculative stocks in the US. Valuations
Focusing.
are at a very high level, and the technical picture is not particularly good, nor is the global economic outlook particularly good, nor is the inflationary outlook particularly good. So, and yet the public is more bullish than ever before in the last few years. You understand? We're very, very biased towards the long equities, and that I question that the market can continue to go up at this level. Well, there is a short-term view and long-term view. I think the economy is in a recession if it were properly measured. And I measure it by, say, looking at the finances of 70% of households. 70% of households in America and in Europe. When I talk about America, I talk essentially about the Western world, are in recession because their cost of living has increased more than their salaries. So the standards of living for most people are actually going down. Now, they're not going down for wealthy people, including myself, who are asset holders, because say last year asset prices still went up quite a lot, especially say if you own bitcoins or gold, then you made a lot of money. And that creates the wealth inequality, not the collapse. The collapse of assets usually rectifies some of the wealth inequality. But at the present time, we have in some Western countries like America a record wealth inequality because the wealthy people have become, thanks to expansionary monetary policies, immensely rich. And people who don't have assets, the middle class and lower classes, are not participating in the asset inflation. You understand? If you don't own a house, you're not participating. If you don't own stocks, you're not participating. So this creates this wealth inequality. And I'm saying that 70% of households, if you look at the statements of companies like Dollar General, that show essentially what the typical household does. The typical household had to cut back even on life necessities like food. Same in Germany, by the way. And for wealthy people, food is not an expenditure. It's very small. Say if you earn $10 million a year, how much you gonna spend on food?
Yeah.
You may spend a lot on drugs, and so forth, but not on food. The wealthy people actually eat less because they want to stay slim. Look, every mania, every investment boom, every investment bubble is accompanied by fraudulent practices. And the more the bubble expands, the more fraud and swindles and shady behavior proliferates. Now, I don't know when, but sometimes in maybe not the so distant future, a massive fraud will be really revealed. And when the massive fraud comes to the surface and into the public's attention, it can be a catalyst to a market decline. I think there will be a lot of volatility and unexpected events. And I would not bet that asset prices always go up because one asset class has clearly collapsed, and that is commercial properties. And until about 5 years ago, people of wealth, they all owned some office building somewhere and so forth because the rents were relatively attractive and commercial properties gave the owners less headache than residential buildings. But now they all collapse in value.